Hello, fellow traders. Tis I, the Rumpled One, coming to you Tuesday, September the 15th, the year's 2020. Let's talk trading. Secrets of trading for a living. Part 3 with Walmal. Before we get started, I just want to remind you that these videos are for educational purposes only, and your results may differ from mine and from Walmal's. So, Walmal, trading for a living, Part 3. How you doing today?
I'm doing okay. It's been a fun and exciting day. I'm up pretty big today, but it wasn't my usual style, that's for sure. It's just been, sometimes you got to do that, and I didn't break any rules. So that's one thing. When you're trying to trade for a living, you just don't break your rules. You just may go and change some things around to take advantage of the market a little bit.
Yeah, we were talking earlier before we made the video. I think we'd been on the phone since about, 3 hours ago, and you were basically just trading from one end of a range to another. And I asked you about if you'd ever studied the Darvis boxes. And so we started talking about how the price is ranging between those boxes, and you were just saying, hey, I'm trading what I see.
Exactly, and it's funny if you do any research on a Darvis box. That's really what that is, And just a recap for people who don't know what that is. Essentially, what this fellow said was you draw a box around what you see between two points, and when it breaks out of that box, it breaks into the next box. You go and take the trade into the next box, and then once you get into the next box, you stay in that trade until you wind up going back in the direction of the other box. And that's essentially what Darvis trading is. Well, I'm kind of doing the same thing, but not really doing his method. It's sort of, I'm trading from one train station to the next train station based on where the price is moving. And when the train stops moving in that direction and seems to be taking another track to a different train station, well, it's time for me to get off that train and take whatever profit or sometimes whatever loss it may have given me at that point in time. Hopefully that wasn't too confusing.
Well, I mean, kind of looking at the chart right here, I've got the 5 minute, and we got a 2 ball, one candle ago, and the DSR scalpers got 2 red checks, so it's looking to go short. But if you look at this hour, it almost touched that 60 line going down, but then it reversed and popped through the 70 line.
Right. And talking about those boxes, it's funny because I was thinking about this earlier, is that, when you look at each hourly candle, the bar itself really turns into a box. If you really think about it, that's really a box. So you're trading from one box to the next box, and you want to go and make sure that you're trading in a direction that box is going in. If that box seems to be getting smaller on you, then maybe it's time to look elsewhere. Or if it trades into the next, let's say if you were long and it starts trading into the box below you, well, it's certainly time to get out. But using that methodology, that works really fine. And if you think about it, that's really what Walmal lines are too, except for there's some statistics behind it to go and prove it. What I'm doing is, for instance, right now we're sitting at a price of 75. So my box right now is somewhere between 70 and 80. So if I break the 80, it's time to go long. If I break the 70, it's time to go short. And if I take, let's say this goes short and I go into 70, and let's say it goes down to 65, so I'm 5 pips profit, and all of a sudden that train looks like it's starting to go back above that 70 and leave that box. Well, guess what? It's time to go look for greener pastures, so to speak.
Yeah, and I remember, I think it was a couple of hours ago where price was stuck between 50 and 60, and I think it was actually stuck between about 55, I think.
Yep. Mm-hmm.
And
Yeah,
I was saying,
between.
yeah, and it was like, you know what? It's stuck here for a while, and it's going to have to come out of there sooner or later.
Right, and the nice thing about it is when it does come out, well, sometimes you can get a pip or 2 pips, and sometimes you can get a lot of pips. And what I did today, which was different than my normal method of doing, is that it was stuck in that range, and so every time it crossed the 60, I'd jump in for a long, and I grab a pip, because what was happening was, as soon as it got out of it, hit that 60 and went above it, it was returning right back into that box again. So it was sort of like, okay, I know what this game is today. I need to go and just do that. And I'm not going to stick here and try to go and get 10 pips on this, because if I do, I'm going to get chopped out. So if I get a pip, take the pip and keep on doing this until it breaks out of that box. And, normally not normally, but a lot of times what you can do is, you take the trade 2 or 3 times, a pip, a pip, a pip, a pip. And then finally on that last time, you go and grab it, and next thing you know, hey, I'm up 5 pips, I'm up 6 pips. And then you get out at that point, or wherever the market tells you to get out. But the point is, you just keep on hitting it, and then you should be okay.
Yeah, I'm bringing the chart over here, and I think it was right here. It was was it the last hour? It was doing that chop, but and like you said, back and forth across that 60 line right here. And it would go up and hit a 1 ball, come down and make a 1 ball, go up and make a 1 ball, go down and make a 1 ball, right across that 60 line, over and over and over again. And then it did the same thing. It wasn't, it was stuck between 70 and 60. It was just not moving out between those 2 lines for the longest time.
Right.
Like at the...
Yeah, if you go back to that previous hour, I just pulled up my chart to that area. I got 1, 2, 3, 4 trades before it finally went and took off. But I got 3 1-pippers in a row, and then on the 4th one, I was able to go and grab 5 pips on that one. So, if you're only trying to make 10 pips a day, that's 9 pips right there.
Right.
So and you can do that. In fact, we had another fellow on the line when I was doing that. He was kind of laughing. He said, but it was just, why are you only taking 1 pip? Well, here's the thing. You just grab the pip, put the money in the bank, and just keep on doing it until the pattern's broken. Once the pattern's broken, then all bets are off.
And so that's what happened this hour, where it finally broke out of this box that it was forming here between about, what was this, 68 and 60. It was just channeling here for almost an hour.
Right.
And then finally it broke, and then it hit the 70, pulled back, and then now it's above 80.
Yeah. And of course, what I had done was at the beginning of this hour, I said, okay, my trading is done. I don't trade past 12 o'clock Eastern, so I didn't do that. That would have been a really nice trade to get on. So when I came back to my desk, it was like, oh man, that would have been nice. But hey, it's not my trade. That's okay too. And that's part of being consistent, is that, the trades are going to come, and I don't need to take every trade. And sometimes even when I'm not supposed to be trading because of statistics, well, you still can go and make those big moves. It's just that's not me. That's not my move. That may be somebody else's move, but it's not my move.
Yeah, and that's one of the things about trading for a living is you're trading within your parameters. You're trading with the statistics, because once you leave that, then you leave the statistics. And once you leave the statistics, then you're kind of like just out there floating. In fact, I was teasing with Walmal. He said, I hope. I said, hope isn't part of your trading plan.
And neither is woulda, shoulda, coulda.
Yeah. And he was laughing at it. What would you say, with friends like me?
Exactly, with friends like you who needs enemies. But but at the same time, I'm glad that you said that to me, because you can get into a situation. Well, I hope the price is going to come back for me. Well, maybe it won't. And what really you should be saying is, I'm going to go and trade my plan. That's the most important thing in terms of being consistent. It's not, I hope the price goes up. It's more of, I need to trade my plan. So if the price gets up, I get at the right spot. If the price goes down, I get out at the right spot. So I minimize my risk. I maximize my profit, and we go from there. And sometimes, believe it or not, maximized profit is only a pip, because if that's all the market's going to give you, that's the maximum the market was going to give you, and that's maximization.
That's true. Yeah, in fact, we had the other trader on the line, and he said something about he was second guessing. I go, there's no need to second guess. There's no need to first guess. It's like you've got your trigger. If you're at the line, you take the trade. You put your stop loss on. And if the market smiles upon you and you can take some pips, you take the pips. Otherwise, the worst thing that's going to happen is you stop out. That's it. And it's really hard for traders to get out of that normal thinking. I've got to be right. I've got to know this is going to work out, because that's the way you live most of your life, where if you do a job, well, if I do this, then this is going to happen. Well, trading, it's not quite that way. There's a statistical probability it might go your way, but there's going to be those times it doesn't. And you just have to accept it. And that is just something that so many traders can't seem to do.
Yeah, you just got to go with the punches and roll with it, and know that you're going to take some losses, but also know that if you're trading with the statistics, you will also take some wins. And if you keep to your plan, you'll at the end of the day, or at the end of the week, or at the end of the month, you'll be up pips. And that's the whole point. You need to be up, not on this trade. You need to be up consistently across all of your trades, because that's what really matters. I mean, I can go and win a trade for 15, 20 pips and be really elated. But if I went and took 3 losses or 4 losses in a row, what good is that? I'm down for the day. I'm down for the week. That doesn't do me any good. I need to go and not worry about being up 15. I need to worry about being consistently following the plan, so that I'm taking whatever the market gives me. Because I can't, I said this on yesterday's video, I'll say it again today, because I think it warrants it. There is nothing that I can do in any regard to go and make price go where I want it to go. All I can do is enter the trade and exit the trade. Where it does after that, I've got no swing in that whatsoever. Unless you're some big trader dropping down, thousands of lots in one shot where you can move the market yourself. You got no chance of doing anything like that. We're retail traders, and as retail traders, we trade what the market gives us. And we need to do that in a consistent way. And if you do, we can make money.
Right. And one of the things is because you kind of called this trade out a few minutes ago. You said if it hits the 80, if you were trading, you'd take it. Well, right now, you could have either had 2 or 3 pips.
Yeah, well, actually, I did take it, so just so you know.
You addict.
So, I just got out. So, but here's the thing. I think this is perfect. You can see it right here, okay? What happened was I took the break at the 80, okay? And as soon as my profit went and hit 5 pips, I jumped out. Now, normally, I'd go to break even plus 1, but the problem is today I've seen it swing against me so hard, so many times. I said, you know what? I'd rather get out right now. Actually, I got out with 4.7. I'd rather get out with 4.7 than get out with plus 1, because I don't know if it's going to do that or not, but today I've seen it do it a lot. Yesterday I saw it do it a lot. So you know what? I'm going to trade my plan, and the biggest thing in my plan is manage my risk. The second biggest thing is to trade what I see. What do I see? I see price going up. It's going up by 1, 2, 3, 4, 5 pips, and then flipping around and going the other direction by the same amount. But why would I give that up? Why should I go and give back to the market what's mine? And that's what we need to do as traders.
Exactly, because if you look, say 3, 5, are you on the 1 minute or 5 minute?
I'm on the 1 minute right now.
Okay, and there's something that, like I'm looking at the 5 minute, but you see price is the same. And so I'll switch over to the 1 minute chart. And so there's people say, oh, I'm trading the 1 minute chart. And I go, no, you're not trading charts. You're trading the price, because it doesn't matter. And you can see here some of these moves on this chart, and Walmal, once again, the fastest 15 minutes of trading is up, and we just hit 85 on my chart. So, fellow traders, trading for a living, stick to your plan, trade what you see. Hope is not a plan. Shoulda, coulda, woulda is not a plan. And you don't have to have confidence. In fact, try not to have confidence. Just take the trade when it appears, set your stop, and see what happens next. Because just remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, welcome aboard. Please click subscribe. This is the Rumpled One, over and out.